Hello and good day. For today, our topic is Cost Volume Profit Analysis or CVP analysis. This topic, entitled Cost Volume Profit Analysis or CVP analysis, is divided into several parts. And this video covers the first part of the discussion in CVP analysis. So without further ado, let's start. What is the meaning of cost volume profit analysis or CVP analysis? CVP analysis is useful for profit planning by way of a systematic analysis of the profit's relationship with various costs and volume of sales. In other words, CVP analysis is the systematic examination of the relationships among cost, volume, and profit. Kita naman yan dun sa pangalan mismo, cost volume profit analysis. In CVP analysis, we are just trying to know the relationship between the cost and the profit. And at the same time, we are also trying to know the relationship between the volume and the profit. In CVP analysis, we are going to use tools, and the tools that we are going to use will help the management in profit planning. At this point, you need to know the different factors that affect profit. First, if there is an increase in selling price, then profit tends to increase. So kung tataas yung selling price, ang effect niyan sa profit ay tataas din. Kapag nag-increase yung selling price, tataas din yung profit. Next, if there is an increase in unit variable cost, then profit tends to decrease. Take note, unit variable cost and variable cost per unit are the same. Next, if there is an increase in fixed cost, then profit tends to decrease. And last, if there is an increase in volume or in unit sales, then profit tends to increase. Take note, in CVP analysis, volume refers to the quantity. In this video, we will focus on single product break-even analysis. This break-even analysis is used when a company produces and sells a single product or one product. That's why single product break-even analysis is also called one product break-even analysis. In single product break-even analysis, what we are going to compute is the break-even point or BEP. The break-even point is a level of activity in pesos or in units at which total revenues equal total costs. Meaning to say, since yung total revenues ay equal sa total costs, at the break-even point, there is neither a profit nor a loss. Ito yung point na kung saan walang profit pero wala ding loss. As you can see, based on the definition, merong dalawang break-even point. Yung una, break-even point in pesos, at yung pangalawa, break-even point in units. I will explain each break-even point one by one. Unahin natin yung break-even point in pesos. Ano ba ang ibig sabihin ng break-even point in pesos? Kapag sinabing break-even point in pesos, ilan ba yung sales in pesos para hindi magkaroon ng profit and at the same time para hindi magkaroon ng loss? Ang formula para makompute yung break-even point in pesos ay fixed costs divided by contribution margin ratio. Para mas madali, FC divided by CMR. Usually, given naman yung fixed cost sa problem, ang problema, paano i-compute yung CMR or contribution margin ratio. There are many ways to compute the CMR or contribution margin ratio. First, CMR is equal to CM divided by sales. CM stands for contribution margin. Second, CMR is equal to contribution margin per unit divided by selling price per unit. Third, CMR is equal to change in CM divided by change in sales. Fourth, CMR is equal to SR minus VCR. SR stands for sales ratio and VCR stands for variable cost ratio. Take note that SR or sales ratio is always 100%. Sa income statement kasi, ang sales ay 100% palagi. Sa balance sheet or sa statement of financial position, ang 100% naman ay total assets. Para makompute yung VCR or variable cost ratio, i-divide natin yung sales sa variable cost. That means variable cost divided by sales. And fifth, CMR is equal to FCR plus PR. FCR stands for fixed cost ratio and PR stands for profit ratio. Para makompute yung FCR or fixed cost ratio, that is fixed cost divided by sales. Yung PR naman or profit ratio, that is profit divided by sales. As long as you know the income statement under the variable costing, madali na lang i-memorize itong mga formulas. Next, break-even point in units. Ano ba yung ibig sabihin ng break-even point in units? Kapag sinabing break-even point in units, ilang units ba yung dapat na mabenta para hindi magkaroon ng profit and at the same time para hindi magkaroon ng loss? Ang formula para makompute yung break-even point in units ay fixed costs divided by contribution margin per unit. Para mas madali, FC divided by CM per U. As you can see, pareho yung numerator ng break-even point in pesos at break-even point in units. The only difference is the denominator. Sa break-even point in pesos, ang denominator ay CMR or contribution margin ratio. Sa break-even point in units naman, ang denominator ay contribution margin per unit or CM per U. Para makompute yung contribution margin per unit, You need to deduct the variable cost per unit from the selling price per unit. That means selling price per unit minus variable cost per unit. Diba, sa income statement under variable costing, sales minus variable cost, that is equal to contribution margin. So it follows na yung selling price per unit minus variable cost per unit is equal to the contribution margin per unit. Let's now proceed to the required sales with desired profit. The break-even formula may be expanded to compute for the required sales in pesos or in units to earn a desired amount of profit. So, pwede pa nating i-expand yung formula ng break-even point in pesos at break-even point in units para makompute yung required sales in pesos at required sales in units. Ang ibig sabihin ng required sales in pesos ay ilan ba yung sales in pesos para ma-achieve yung desired amount of profit or para ma-achieve yung target profit. Yung required sales in units naman, ilang units ba yung dapat na mabenta para ma-achieve yung desired amount of profit or target profit. To earn a desired amount of profit, ganon din lang yung formula. Yun nga lang, kailangang magdagdag ng profit sa numerator. So that means the required sales in pesos is equal to fixed cost plus profit divided by contribution margin ratio. And the required sales in units is equal to fixed cost plus profit divided by contribution margin per unit. But take note, yung profit na gagamitin dito should be expressed before tax. Meaning to say, yung profit na gagamitin dito ay profit before tax. What if ang given sa problem ay profit after tax? Kapag ang given ay profit after tax, kailangan pang i-divide yan ng 100% minus tax rate. So that means profit after tax divided by the quantity, 100% minus tax rate. Next, to earn a desired profit ratio, ganun din lang yung formula. Yun nga lang, kailangang i-deduct yung profit ratio sa required sales in pesos. At kailangang i-deduct yung profit per unit sa required sales in units. So that means fixed cost divided by CMR minus PR for the required sales in pesos. And for the required sales in units, that is fixed cost divided by contribution margin per unit minus profit per unit. Ang profit ratio, tinatawag din yan na return on sales. So do not be confused kung ang given sa problem ay return on sales. Kasi ang return on sales at profit ratio ay magkapareho. Let's now answer problem number 1. X company manufactures and sells a single product. The company's sales and expenses for a recent month follows. Sales 1,500 units, 37,500 pesos, less variable cost, 15,000 pesos, contribution margin, 22,500 pesos, less fixed cost, 15,000 pesos, profit, 7,500 pesos. Required, first, determine the following A. Unit selling price, B. Unit variable cost, and C. Contribution margin ratio or CMR. Second, for profit planning purposes, compute the following. A. Break-even point in units, and B. Break-even peso sales. Third, what unit sales are required to earn 6,000 pesos profit for the month? Fourth, what peso sales are required to earn an after-tax profit of 4,800 pesos, assuming tax rate is 20%. Let's answer requirement number 1. Determine the following. A. Unit selling price, B. Unit variable cost, and C. Contribution margin ratio or CMR. Unahin natin yung unit selling price or selling price per unit. Unit selling price or selling price per unit is equal to sales in pesos divided by sales in units. The sales in pesos amount to 37,500 pesos. At yung sales in units ay 1,500 units. So, 37,500 pesos divided by 1,500 units, that is equal to 25 pesos. And that is the unit selling price or the selling price per unit. Next, unit variable cost or variable cost per unit. Unit variable cost or variable cost per unit is equal to the variable cost divided by the units sold. Ang variable cost ay 15,000 pesos at ang units sold ay 1,500 units. So that is 15,000 pesos divided by 1,500 units. 15,000 pesos divided by 1,500 units, that is equal to 10 pesos. And that is the unit variable cost or the variable cost per unit. If ever itatanong sa problem kung ano yung contribution margin per unit or kung ilan yung contribution margin per unit or unit contribution margin, i-deduct nyo lang yung 10 pesos sa 25 pesos. So that is 25 pesos minus 10 pesos. 25 pesos minus 10 pesos, that is equal to 15 pesos. So 15 pesos ang unit contribution margin or contribution margin per unit. Recall that the contribution margin per unit is equal to the selling price per unit minus the variable cost per unit. Next, contribution margin ratio or CMR. Contribution margin ratio or CMR is equal to contribution margin divided by sales. Ang contribution margin ay 22,500 pesos at ang sales ay 37,500 pesos. So 22,500 pesos divided by 37,500 pesos, that is equal to 60%. Therefore, the contribution margin ratio or the CMR is 60%. Of course, there are other ways to compute for the CMR. Pwedeng contribution margin per unit divided by selling price per unit. Ang contribution margin per unit ay 15 pesos. At ang selling price per unit ay 25 pesos. So 15 pesos divided by 25 pesos, that is equal to 60%. Ano pa? Pwedeng CMR is equal to sales ratio minus variable cost ratio. Ang contribution margin ratio ay 60%. Ang sales ratio palagi ang 100%. Yung variable cost ratio, paano yan kinocompute? Variable cost divided by sales. So, 15,000 pesos divided by 37,500 pesos. 15,000 pesos divided by 37,500 pesos, that is equal to 40%. Sales ratio na 100% minus variable cost ratio na 40%, that is equal to the contribution margin ratio of 60%. Ano pa? Contribution margin ratio is equal to fixed cost ratio plus profit ratio. Paano kinocompute yung fixed cost ratio? Fixed cost divided by sales. So, 15,000 pesos divided by 37,500 pesos, that is equal to 40%. How about the profit ratio? Profit divided by sales. So, 7,500 pesos divided by 37,500 pesos. 7,500 pesos divided by 37,500 pesos, that is equal to 20%. Yung fixed cost ratio na 40% plus yung profit ratio na 20%, yan ay equal sa contribution margin ratio na 60%. As you can see, there are many ways to compute the contribution margin ratio. In this problem, we cannot use the formula CMR is equal to the change in CM divided by the change in sales because there is no change in the contribution margin and there is no change in sales. Next, requirement number 2, for profit planning purposes, compute the following: A, break-even point in units, and B, break-even peso sales. The break-even point in units is equal to fixed cost divided by contribution margin per unit. Ang fixed cost ay 15,000 pesos at ang contribution margin per unit ay 15 pesos. So 15,000 pesos divided by 15 pesos, that is equal to 1,000 units. Yang break-even peso sales, yan yung break-even point in pesos. The break-even point in pesos is equal to fixed cost divided by contribution margin ratio. Ang fixed cost ay 15,000 pesos at ang contribution margin ratio ay 60%. So 15,000 pesos divided by 60%, that is equal to 25,000 pesos. I-check na natin kung tama yung break-even point in units na 1,000 units at break-even point in pesos na 25,000 pesos. Dapat ang lalabas na profit or loss ay 0. Kasi nga, at the break-even point, walang profit at walang loss. Ang break-even point in units ay 1,000 units at ang break-even point in pesos ay 25,000 pesos. So the sales amount to 25,000 pesos. That is 1,000 units times 25 pesos. Ililas natin yung variable cost na 10,000 pesos. That is 1,000 units times 10 pesos. Take note, yung 10 pesos dito ay yung variable cost per unit. 25,000 pesos minus 10,000 pesos, that is equal to 15,000 pesos, and that is the contribution margin. You can also compute the contribution margin by multiplying the 1,000 units and 15 pesos. 1,000 units times 15 pesos, that is equal to 15,000 pesos. Take note, yung 15 pesos dito, yan yung contribution margin per unit. Next, ima-minus natin yung fixed cost na 15,000 pesos. 15,000 pesos minus 15,000 pesos, that is equal to 0. As you can see, there is neither a profit nor a loss. That means tama yung break-even point in units na 1,000 units at break-even point in pesos na 25,000 pesos. Next, requirement number 3. What unit sales are required to earn 6,000 pesos profit for the month? Ilang units yung dapat na mabenta para makapag-earn si X company ng 6,000 pesos profit for the month? Therefore, ang hinahanap dito sa problem or sa requirement number 3 ay required sales in units with desired profit. And the formula for that is fixed cost plus profit divided by contribution margin per unit. Recall na ang gagamitin na profit sa computation ay profit before tax. Since hindi binigay dito sa requirement kung yung 6,000 pesos ba na profit ay profit before tax or profit after tax, assume that the 6,000 pesos profit is profit before tax. Ang fixed cost ay 15,000 pesos, ang profit before tax ay 6,000 pesos, at ang contribution margin per unit ay 15 pesos. So, 15,000 pesos plus 6,000 pesos divided by 15 pesos, that is equal to 1,400 units. Anong ibig sabihin nito? 1,400 units yung dapat na mabenta ni X company para ma-earn niya yung 6,000 pesos profit for the month. I-check lang natin kung tama ba yung 1,400 units. Dapat ang lalabas na profit ay 6,000 pesos. Ang required sales in units ay 1,400 units. Therefore, ang sales ay 35,000 pesos. That is 1,400 units times selling price per unit na 25 pesos. Ima-minus natin yung variable cost na 14,000 pesos. That is 1,400 units times yung variable cost per unit na 10 pesos. 35,000 pesos minus 14,000 pesos, that is equal to 21,000 pesos. And that is the contribution margin. You can also compute for the contribution margin by getting the product of 1,400 units and 15 pesos. Yung 15 pesos dito ay yung contribution margin per unit. Then, i-deduct natin yung fixed cost na 15,000 pesos. 21,000 pesos minus 15,000 pesos, that is equal to 6,000 pesos na profit. Therefore, tama yung required sales in units na 1,400 units. Next, requirement number 4, what peso sales are required to earn an after-tax profit of 4,800 pesos, assuming tax rate is 20%. This time, ang hinahanap naman ay required sales in pesos. And the formula for that is fixed cost plus profit divided by contribution margin ratio. Recall na ang gagamitin na profit sa computation ay profit before tax. Pero dito sa requirement, ang given ay profit after tax na 4,800 pesos. So, kailangan pang kunin yung profit before tax. At para makuha yung profit before tax, ang gagawin ninyo, 4,800 pesos na profit after tax, i-divide nyo yan sa 100% minus 20%. That will become 4,800 pesos divided by 80%. 4,800 pesos divided by 80%, that is equal to 6,000 pesos profit before tax. At this point, since alam na natin yung profit before tax, we can now compute for the required sales in pesos. That is equal to 15,000 pesos plus 6,000 pesos divided by 60%. 15,000 pesos plus 6,000 pesos, that is equal to 21,000 pesos divided by 60%, that is equal to 35,000 pesos. At yan na yung required sales in pesos. There's no need to check whether the 35,000 pesos is correct since na-compute na natin yan kanina sa number 3. Let's now proceed to problem number 2. X corporation produces and sells a single product. The selling price is 25 pesos and the variable cost is 15 pesos per unit. The corporation's fixed cost is 100 pesos per month. Average monthly sales is 11,000 units. Requirement number 1, how much sales in pesos must be generated to earn profit that is 8% of such sales? And requirement number 2, how many units must be sold to earn profit of 2 pesos per unit? Unahin natin yung requirement number 1. How much sales in pesos must be generated to earn profit that is 8% of such sales? Meaning to say, ang hinahanap dito sa requirement number 1 ay required sales in pesos with desired profit ratio. And the formula for that is fixed cost divided by contribution margin ratio minus profit ratio. Yung fixed cost ay given na sa problem. Ang problema natin is yung contribution margin ratio. Ang selling price per unit ay 25 pesos at ang variable cost per unit ay 15 pesos. So, ang contribution margin per unit ay 10 pesos. Para ma-compute yung contribution margin ratio, we will divide the contribution margin per unit by the selling price per unit. So that means 10 pesos divided by 25 pesos. 10 pesos divided by 25 pesos, that is equal to 40%. And that 40% is the contribution margin ratio. At this point, we can now compute the required sales in pesos. 100,000 pesos divided by 40% minus 8%. That will become 100,000 pesos divided by 32%. 100,000 pesos divided by 32%, that is equal to 312,500 pesos. And that is the required sales in pesos. Next, requirement number 2, how many units must be sold to earn profit of 2 pesos per unit? That means, ang hinahanap dito sa requirement number 2 ay required sales in units with desired profit of 2 pesos per unit. And the formula for that is fixed cost divided by contribution margin per unit minus profit per unit. Ang fixed cost ay 100,000 pesos. Ang contribution margin per unit na na-compute natin kanina ay 10 pesos. At ang profit per unit ay 2 pesos. 100,000 pesos divided by 10 pesos minus 2 pesos. That will become 100,000 pesos divided by 8 pesos. 100,000 pesos divided by 8 pesos, that is equal to 12,500 units. Therefore, the required sales in units that must be sold to earn profit of 2 pesos per unit is 12,500 units. Yan yung dapat na mabenta ni X Corporation para makapag-earn siya ng profit na 2 pesos per unit.